Okay, so we are starting this event and we'll be live in 5, 4, 3, 2, 1. Hello and welcome everyone. My name is Sunny Burns. And I decided to host this webinar, my first webinar, because I hit 100 subscriber milestone. I know that's not a lot, 100 subscribers, but I'm pretty proud of it. It only took me about 3 years to do it. Anyway, my name is Sunny Burns. And I do a little bit of YouTubing, trying to get more into it. Mostly doing real estate investing for passive income. By trade, I am a mechanical engineer working for the Department of Defense and just trying to kind of build passive income streams and get the financial independence lifestyle. I see we got some people. My Uncle Michael's online. Hey, Uncle Michael. And we have Marcus. Marcus has a great meetup that I've been going to in northern New Jersey. You should hit him up, NJ Firestarters. Anyway, if you're around and you're on the chat online, go to the chat box and type in where you're from. And and we'll get started in just a few seconds. We're going to be going over this spreadsheet. And this spreadsheet is a couple years in the making now. Took me a long time to kind of get it to where it is now, but I really feel like it gives such a great picture of your overall finances and things like that. And okay, we got Alan Jensen all the way from Iowa. Anyway, I just feel like it's so important. Like, a lot of people come to me and ask me, like, how do I get to where you are? Or how do I just start creating passive income streams or getting, increase my net worth, increase my savings rate. And I always tell them, fill out this spreadsheet, because if you don't know where you are, it's hard to know where you want to go or how to get to where you want to go. So I'm just going to do a quick deep dive first, and then I'm going to share a little quick lesson, and then I'm going to do a deep dive where we're actually going to fill out one of these spreadsheets from beginning to end, because it is a little confusing. There's a lot of numbers going on, and I tried to make it a little simpler. So there's 4 tabs on the bottom. For anyone who doesn't have access yet, if you go to the comments, there is a link to get access. I am asking you to subscribe to do that. Subscribe to my blog where I share about creating passive income streams and living a frugal life. And it's a good blog, I think. Anyway, I have a goal to reach 5,000 subscribers before my birthday. So hopefully this helps me do that, helps me share what I know, and helps all of you as well, and just get the word out. So anyway, like I was saying, there's 4 tabs on the bottom. The first one kind of is my personal finances. You can quickly see, my net worth, my annual savings rate, my income, my passive income. So that's all rental income right there. I have all these charts. But what I did to make it simpler is any way to enlarge the picture? Yes, I can enlarge it. How's that? Is that any better? And hopefully you guys aren't on your phones. Go on the desktop, I'd say. Okay, so there's 4 tabs to make it easier because everyone's starting at a different place. So if you go to the second tab, it's for like the average single person, median salary, 50K. And so you could start off with that template. If you don't want to start with the blank template, I just start one of these. And to edit your own version, all you got to do once you get access is go to File, Make a Copy, and you can start just editing your copy right there and then. So that's a single person. The next one I have family, and I tried to use kind of like statistical averages of like median salaries, median debts, things like that, and median expenses for all of that. And you can see kind of the expenses changing from person to person. Like this person's only making 50K, then they have 46K in expenses, and that's due to this 34,000 in recurring bills and things like that, and then a budget of 1,000. And I'll go more into that in detail soon. But I just kind of want to give you a general glimpse of what this is all about. So let's go back to kind of my finances since I know that best. So the top left block is really... Sorry, I'm getting distracted by all these questions. How do you put both numbers on the graph? Amount and percent. I will have to get back to you, Paul. Anyway, going back to the generally scheduled program. So we have this block here, and that's pretty much your overall top level figures. I'll do Q&A maybe towards the end. And then, so you can put your names, your occupation, your credit score. And I love to use this. I actually use this with all my mortgages. I just gave this to my banker. Not exactly like this, not all this information, but a lot of it. And they could tell really quick, my financial picture, where everything was, my savings. And I attach, you can see reference numbers here. I attach just a PDF binder with statements of my banking, my brokerage account, my Roth IRAs, my 401ks, and things like that. And they could see it all really quickly. Just refer to those pages to make sure those numbers are correct, and then they could approve me for the loan really quick. So that's why I kind of have it formatted a little bit like this, but it's also really easy to see. So you have your salaries here. My wife is actually stay at home with our 2 kids, so it's just me making the salary, but she helps out with the rental income business. We have a 4-family and a 3-family home, so 7 units, and we live in one for free. So 6 units bringing in $103,000 a year. So total gross income of $200K. And then you have your total expenses, which is a combination of all your bills and recurring expenses, things like gym memberships. We even have a date night babysitter. Thursdays we go on date nights, $50 a week, paying this babysitter 3.5 hours. Pretty good salary, I think. Pretty good deal. If you want to babysit, hit me up. And so that's $113K. But then we have a budget. And we budget for any out-of-pocket expenses, things that aren't recurring or charged monthly. And so our budget is a total of $2,400 a month, and 1,000 of that, like half of it, goes to groceries, and half just goes to my wife and me. And really, we just withdraw $1,000 or it's $2,000 at the beginning from the ATM, and we put 1,000 away for a grocery envelope and 500 away in her envelope, 500 away in my envelope, and that's all we're allowed to spend that month for out-of-pocket things like eating out, gas, and gifts, personal things. Yeah. Anyway, so the $113,000 number plus the $28,000 number equals your total expense, and after you have your total income and total expense, you have your total annual savings. So we're able to save a pretty good amount, $61,000 a year. And here's a chart that kind of shows it a little better. I mean, 30% isn't great. A lot of, super financial independence people are more like 60, 70% savings rate. But a lot of this you got to figure is actually housing expenses from our rental properties. $86,000, you can see I have a breakout here of the total based on personal expenses, taxes, and insurance, and housing. So a lot of that does come from housing. Anyway, I don't want to get too hung up on the little details, but here's your total assets. So that's everything in your savings, your brokerage, your Roth, your retirement accounts, and real estate assets in my case. And that's around 1.2. But then in terms of mortgages, loans, debts, liabilities, that's around $750,000. And then my net worth soon is approaching around $500,000. And that's kind of broken out here. I have it kind of categorized by liquid cash, so things in bank accounts, cash in your pocket goes here. Here is semi-liquid, things like your brokerage account or your Roth IRA, because you can withdraw any kind of contribution. Anything you put into a Roth IRA, you can withdraw at any time. You can't withdraw any gains. So that's why I consider it semi-liquid for me to use for a real estate purchase or other investments should I choose to. But that's my specific case. And then I have retirement accounts, things that I just won't touch. So just not liquid. I could borrow from perhaps if I wanted to. Up to 50% of your 401k you can borrow. Up to 50k, I believe. And then I have my real estate assets down here. And then finally my debts. So things like student loans. I have a home equity line of credit. So that's outside of the 2 mortgages I have here. Here's the appraised value of those real estate assets. And then the mortgages I have on them. And that contributes to equity, which then contributes to my net worth. So all that equity and the total number of the accounts goes into my total assets. And then all the liabilities get added up for those liabilities. So that's that section. To the left is all like assets and liabilities. And then when you go to the right side, that's all your bills and reoccurring expenses, all your memberships, your subscriptions. And I even calculate things like health insurance, dental insurance, life insurance, anything that's taken away from that paycheck automatically, recurringly every single month. And I even put in my estimate for my taxes and Social Security, and that's just based off last year's return and what I'm projecting for the next year. And Social Security and Medicare, that's based pretty much off your paycheck, what you see them taking out. And then I have housing expenses. For the single person, if you go to the single person, all they have is rent. Maybe they do own a house, but right now it's just rent. So in my case, I have all these housing expenses from the rental properties. And then other miscellaneous items, paying off student loans and things like that. So that all goes into your bills and recurring. And then this little chart here, this monthly spend limit, basically tells you how much you can spend up until. before going to net zero, like not having any savings. So I can spend $7,493 a month. Let's see, do I have a fuller screen? Let me scroll over to the right a little bit. Oop. And you can see my monthly spend here. And so I could spend up to $7,493, but I'm only choosing to spend $2,400 a month out of that total budget here. So this monthly spend limit helps you determine your budget. So I could budget up to $7,493, but then my savings rate over here would go down to 0. So we chose a pretty. We used to be really cheap and have this number at like $1,400, but we had 2 kids and we decided, live a little bit, so we bumped that up a little bit. So anyway, that's that monthly spending limit, and this other monthly spending limit to the right is if we maxed out all our retirement accounts. So that's just a good thing to look at. Okay, and then down here is your budget, which I was kind of talked about a little bit. We'll go more into it a little later. And then down, so all around, we have these graphs that'll help you kind of determine and just see visually better what your savings rates are and how much you're saving versus expenses, your monthly spend limit, as I just talked about, your assets, and the breakout amongst like how much of it is debt, how much of it's in cash, stocks. Like you can see mine, majority of it's in real estate. Not necessarily a good thing, but that's what it is. I have some in retirement, some in stocks, some in IRAs, things like that. And then you have down here on the bottom your projected net worth, which I think is kind of cool. Your net worth now, and then what it'll be at the year end, in 5 years, in 10 years. And this is based upon a 7% increase of your brokerage and retirement accounts, and I believe that was it. And then your annual savings rate too. So if we go to goals and stats, so you can put in whatever number you want here. So like I could put $500,000, and it'll tell me how long it's going to take me to get to that goal. So there's 2 numbers here, but it'll take me 0.3 years to get to my $500,000 goal here. And if I change that number, so like everyone wants to be a millionaire, so my goal would be to be a millionaire. And that'll take me 8.5 years to achieve based strictly off my savings rate. So my savings rate, so 61,000 times 8.5 plus my current net worth will equal $1 million. And what I did over here to the right is years to achieve with a 7% interest rate, and it's drastically lower. And this works in the opposite direction too. Like you can see the single person, he has all this student loan debt, and he just wants to get to a net zero, $0 annual worth. And so normally it would take him 13.4 years based on his savings rate, but because of the negative interest rate, it's taking him a lot longer. So interest can work for you or against you. And then finally to the left here is the financial independence percentage, and that's basically how close you are to achieving financial independence. And I know not everyone here is looking to achieve financial independence, but it's kind of good to know. And that's based strictly off how much passive income streams you are generating or how much net worth you have, and you could withdraw from at a safe 4% rate and divide that by your expenses. So 2 of those combined. So for my case, I would need additional $20,000 a year in passive income to become 100% financially independent, or I would need an additional almost $500,000. So either $20,000 more in passive income or $487,000 more in net worth, and then I'll be 100% financially independent. And you can kind of see what these guys are doing. Like a lot of these people don't have passive income in these examples. So they need a lot more passive income or a lot more net worth as well. So that's a quick review. And again, we're going to go step by step through the blank template. Before I do that, I do want to share a quick lesson. Let's see, any other questions? How do you put both numbers on the graph? Okay, that was that other question. Okay, so maybe we will just go right into that lesson then. So right here, and here we go. Okay, so this is one of my favorite lessons that I came up with and I'm proud of because I think it's cool. So let's picture you made a $50,000 salary. That's kind of the gross salary for someone who just graduated college. That's what I started out when I graduated as an engineer, kind of low at a government salary. So let's make $50,000 a year, And this just kind of shows you why it's so important to really track your finances and know where your money is going. Because I thought when I made $50,000, when I was little, if I made $50,000, I would never have to worry about anything. I could just buy whatever I want and I'd be golden because it's $50,000. But through this example, you'll see that's not true. So let's say after taxes, federal and state, they're taking away $6,000 a year. And you could use like a tax income calculator to see that these are really legitimate numbers. Social Security takes away $3,000, Medicare $1,000, health insurance you're paying maybe $3,500 a year. So after all those expenses, really you're only bringing home $36,500, and that's why your paycheck is a lot smaller than what your salary kind of is. So $36,500. There's 365 days in a year. So if you divide that take-home pay, $36,500, by the amount of days in a year, you're actually from that $50,000 salary bringing home $100 a day. $100 a day, right? That's a lot of money to spend $100 a day, and if you don't spend more than that, then you're saving money, right? But let's say you rent an apartment. Around here, I live near New York City. A one-bedroom is going to cost you close to $1,500 a month. Maybe a two-bedroom where I live in Garfield, you can get for $1,500 a month. Divide that by 30 days in a month, and that's $50 a day you're spending on housing. So half of your paycheck is going directly to your housing costs in this example. And sure, maybe you can find a $1,000 apartment, but you're probably not going to find much lower around here. Other parts of the country, maybe you'll do better. So after this, in this example, you're left with $50 that day after your housing cost is expended. And let's say you went to Dunkin' Donuts this morning, grabbed a cup of coffee, grabbed a bagel, $5 for breakfast, and you found a really cheap $5 foot-long lunch, and then you had a cheap $10 dinner, right? After all those expenses, you're left with $30. So you're doing okay still. You're still positive, but maybe you stopped for gas on your way home, or maybe you bought something for $20 on Amazon. Anyway, you spent $20 and you're left with $10. So you're still, savings is income minus expenses, so you have $10 in savings. So you're doing good. But you're forgetting about all these other expenses that you have, things like home insurance or car insurance, or maybe you have a car payment, or maybe you have utilities you pay, or phone bills, or you have a Netflix account. So all these things really stack up, and you go from $50,000 to $0 to broke to in debt very easily if you're not calculating. And okay, no, we're not going into that. That's for 2 days from now. Okay, so that is why I feel it is so important to really look at this stuff. To track your expenses, because you think it's a lot of money, but it goes away so quickly. Sorry, I'm distracting myself. And it's really important to pay attention to this stuff, because it seems like a lot of money, but it really disappears very quickly. Okay, is this okay for everyone? Can everyone see okay? Is it large enough? Let's see, what else did I want to go into? I think that was everything. I hope you guys enjoyed that example. Anyone want to chat in the box that was a great example? Because I think it was. Okay, moving forward. So, like I said, we have the single person. And so I just kind of want to walk you guys through step-by-step how to fill this out for yourself. Don't touch anything in bold. Okay, only fill in things that are blank or not bold. So like if you're editing a template, don't fill out anything in bold. Okay, so here we go. Let me increase the percentage here a little bit so you guys can see a little better. Okay, that should work. Okay, so let's say this single guy is named John, and let's say he's a teacher. A lot of teachers I know. Let's say he has a pretty decent credit score at 680. He makes $50,000, just like in our example. He has no passive income. And you can see kind of the chart starting to populate. Again, I'm going to skip over any bold fields because those have their own formulas. Let's say he has an account at Chase Bank, and he has maybe 800 socked away there. And let's say he has some cash, some cash money for rainy days. Has $100 socked away there. And then maybe he has a Robinhood app because he's cool and hipster. And Robinhood's actually pretty good. So let's say he has $3,000 there. And then maybe he read my Roth IRA post and made a Vanguard IRA and has $1,000 there. And then in his retirement account, so teachers get 403Bs actually, similar to a 401k. And then he has $3,000 there. And let's say he doesn't have any real estate. He's choosing to rent. Hey, very clear example. I appreciate that, Uncle Michael. Thank you. And Darren, cool. I like it. I'm glad you guys do too. Okay, going forward. Debts. So let's say he just graduated college, just starting out as a teacher, and he went to an expensive school. He decided to dorm because everyone likes to dorm. And make sure these numbers in the debts are negative, please. So negative 37,500. You could see immediately his net worth now is negative, but he still has a good savings rate. So after, you see down here, after the first year, he'll still be positive. But you see his make up a lot of debt here. Okay, and then let's say he, graduated college, landed a good job as a teacher. He deserves a brand new car, so he got himself, a reasonable cheap car. Maybe he bought a brand new Toyota Yaris. You can buy those for $15,000 brand new, base package. That's what I drive, but I bought mine for $5,000, just 3 years old, with 50,000 miles. You can read my cars post. I've bought 19 cars in my lifetime, and I have that all on my blog, fanbester.com, if anyone's interested. And then let's say he has a credit card balance because he is not financially savvy yet, but he will be after filling out this spreadsheet. And let's say it's like 5,700. Okay, and you can kind of see these numbers moving around. And then we are going to put in other things. Let's say he likes to work out, or thinks he does at least, and he got himself a gym membership. He pays that monthly, $30 a month. Let's say a phone bill. And you can put it in anywhere here as a weekly expense, bi-weekly, monthly. It'll all calculate as annual expense. It'll total itself up. So phone bill, let's say he has a $60 a month phone bill. I feel like that's the average these days. Let's say he pays for internet at $30. I mean, that's kind of cheap, but maybe he shares with someone. And then he has that car, so he has to pay car insurance. And because he has a payment on it, he has to pay more than just liability. So he's paying $500, which maybe is good. And then let's say the student loan payment of maybe $150 a month. And then credit card interest payment of maybe $300. I don't know. Yeah, let's put 50 here, and let's put $300 for that big student loan payment. And we forgot car payment. That'll be maybe $150. So you can kind of quickly see, his expenses are starting to gather into his savings. But still, he's doing good. He's saving $41,000. But then we still got a lot of other things. He likes Netflix. I like Netflix too, but I share off my dad because I'm cheap. And he has an Amazon Prime account, $13 a month. And let's put in Spotify account. So you just fill these things out with what you have, go through your expenses and fill it out with what you have. And let's put in things like health insurance of maybe pays out of his paycheck twice a week, gets paid twice a week. His estimated income tax. Let's put dental. He has dental insurance of $20. And federal taxes and state taxes of $6,000 a year. I think that would be about correct for him for federal and state there. And then Social Security and Medicare of $1,000. $147 a month comes out of his paycheck. And then let's do a housing payment. So he rents. And let's say he got a good deal at $1,000 a month. You can see that quickly jumped up. So now he's still saving, a pretty good amount, 30% of his paycheck. But these are all recurring expenses. These aren't and I haven't included any out-of-pocket expenses yet. But these are things that he's going to be charged no matter what he does. Unless he eliminates them, he chooses to get rid of that Netflix account and save that $8 a month or $96 a year. He can do that. But as it is, these are what's going to hit every month. It's going to be that much out of his monthly income. And so the maximum he can save right now is at $15,000. But he has to eat. He needs groceries. He's probably going to eat out. He's probably going to have some entertainment expenses. He's going to pay for gas for his car, personal expenses, entertainment, things like that. He's going to want to travel. He's going to want to buy gifts for birthdays, go Christmas, whatever, things like that. Anyway, the maximum he can spend without going into debt is this monthly spend limit of $1,300. So he's going to try to spend below that. So let's say, he does some cooking, saves some money that way, and he gets $400 of groceries a month. It's kind of on the low end, but maybe he can do it. let's say he loves to eat out, so we'll put it a little higher at $200, which isn't crazy, but we'll give him $200. And let's say gas, he has that Yaris. It's fuel efficient, 40 miles per gallon. I love my Yaris. And he spends $75 a month. And then on personal, he gives himself a $125 a month budget. And then travel, he loves to travel, so $100, which is $1,200 a year. Not that much, actually. And then gives himself a $100 budget to give people gifts and things. And then you can see quickly that his savings rate just really diminished here, 92%, and is only saving $3,000 a year. His negative net worth is now very, very slowly not almost progressing at all. And that's just from $1,000 a budget, which $1,000 sounds like a lot, but I dare you to try it. Go withdraw $1,000 this month and try to only spend out of your wallet with that $1,000. It will be very hard. Like okay, that's what we do. No, we don't do exactly 1,000, but close to 1,000. 1,000 for groceries and then 500 each. And that 500, like, we hardly spend that much, I feel. But that it goes so quick. Like, you think, like, when you're using credit cards, you're like, oh, I'm so good at not spending money. And then when you go into like a cash system like this, or you use credit cards but you use an app to track every single purchase, you can do that method too for this. You can really see how quickly that goes. But I dare you to try cash for at least a month or two. Who cares about the credit card points? You can do it for a month or two. Start out with a boatload of cash, $1,000, whatever your budget tells you to start out with. Withdraw it that month, and then try to pull from it slowly. And by the end of the month, to see all those Benjamins gone, and you just think, what happened to all that? But it's really an eye-opener, and I challenge everyone to do that. I think it's such a good exercise. My wife and I do it at least 2 months out of the year, usually around January. We're still doing it now into February, and it definitely helps you keep up those frugal habits and then reach that passive income. Okay, so what can this guy do? Maybe this guy can get a roommate and then spend, instead of $1,000 a month, spend $500. And then you can see drastically, now he's not in the negatives. After 10 years it'll take him to pay off those student loans and finally be in the positives. Anyway, play around with this, put in your real numbers, and if you want to use one of these templates to start off with, you can, or use the blank template. Oh shoot, I just filled in that whole blank template. Oh well, I'm gonna have to do another one. So let me duplicate that. There will be a blank template for you guys to work with before the end of this. So like I said, you can delete anything that's not bold. So I can just do that for you guys right now if you want to work off this, because this is the master. Probably should have thought about that before. Anyway, just like that, and we are done. You guys have a blank template to work off of. So that's copy. Anyway, let's go back to this. So this guy has like less than 1% of financial independence rate. That's because he has no net worth. So don't even pay attention to those numbers. His goal is to break even. And with that $500, okay, so at $1,000 a month, it would take him 40 years to achieve this goal of getting rid of his student loan debt, car loan, things like that. But if we get a roommate and cuts just that one expense, and it's his biggest expense, but he cuts it by 500, he now will only take 6 years to reach zero net worth. So I just want to show you, this is a powerful tool. Plug in your own finances, plug in your own goal. Maybe you do have a goal to be a millionaire, but you're gonna need to take extraordinary steps to achieve that goal. You don't want to be 40 years to achieve it. Maybe you want to develop some passive income stream, or maybe you want to just get rid of your housing expense completely by buying a duplex or a 3-family or a 4-family. I'm currently in a 4-family house. I live in 1 unit. I rent out the 3 other units, and the 3 other tenants pay for my mortgage, my taxes, my interest, and we make about $300 a month on top. So we live for free and make about $300 a month. Okay, so that's pretty much the bulk of my presentation I got going on here. I guess I will go to questions and answers unless I think of what it was that I think I want to talk about. Okay, let's see. What do we got? That $1,000 doesn't include your bills, recurring expenses, correct? Yes, correct. That's why $1,000. Yes, the recurring expenses were all right up in here. So that's things that are coming, every month you get billed a gym membership, a phone bill, an internet bill. And maybe he'll get rid of that gym membership and just work out at home and just achieve that goal that much quicker. Anyway, yes. So the monthly budget's anything that's out of pocket. So anything you're swiping your credit card for or cash for. I guess a lot of these would be set up as automatic payments. Okay, next question. Wouldn't you advise someone to pay yourself first and save 10%, 500 instead of leftovers? Yes, I believe that's a good idea. But again, this is more of a planning tool and snapshot tool than anything else. What I personally do is I save a different version of the sheet pretty much every 3 months. I take a different snapshot. I update all my numbers here. I use personalcapital.com, and it automatically updates your bank accounts and things like that. And I just plug that all in and save a different sheet. And I date the sheet. So I know, okay, in 2018 in October, I had this much net worth and this is what was going on in my finances. And then I save a new one 3 months later. And 2019, I had this much net worth and this is what was going on. And I see those snapshots and I see how my savings rate's changing and things like that. You know, we added on that babysitter recently and that took away some of our savings rate. You know, $50 a week doesn't seem like much, but it's, you know, $2,600 a year. It adds up, things like that. How do we download it? Oh, if you go to the comments down below, you will get access to a link that will give you access. You do have to subscribe to the blog. I'm forcing you to do that because I have a goal to have 5,000 subscribers, not YouTube subscribers, but you guys want to subscribe on YouTube. I'm making pretty good videos, I think. You'll like it. Workable forms, yes. So go to the comments in the window. Sorry, this is going to look weird for you guys. Oh, shoot. So right there, click that link and you should be able to get it. Yeah, or you can go to this link, www.famvestor.com/spreadsheet, and you'll get that link too. And don't forget, when you go to that link to these windows, go to, File, Make a Copy to start editing your own version. File, Make a Copy. Yeah, and you can just start editing it right there. And you can even download it as Excel. I tested it today. It seemed to work pretty good. So if you prefer Excel, you could just download as Excel. And that should work out pretty well for you. Okay, questions that I skipped. Hey, for those with more line items, will the insert row function? It will mess things up, actually. Yeah, I know some people have more line items. You can play around with it, but it will probably mess things up. Let's see. Okay, let's duplicate here. So just duplicate tabs, I would say. Let me go with full screen so you can see a little better. View 100%, 100%. Okay, so I just duplicated this so I can mess around. Like if I pull all this down, maybe it's okay. And you can add some line items that way. You're just gonna have to move some of this stuff around. Anyway, play around with it. You might have to readjust some of these, some things, some equations and things like that, but you should be able to play around with it if you have more line items. You know what I'll do? I'll make a second blank template for you crazy spenders out there. Yes, I'm judging you. And make a lot more room here. I just like this because it's kind of, you can see everything on one nice page. But I will do that for you guys. Good point. Yes, let me Control Z that because it doesn't look good. Okay, any other questions? This is time for Q&A. Did you guys like it? Give me a thumbs up, subscribe. Looking for more subscribers. And I'm here to answer any questions you may have. Let me look if I had anything else I want to talk about. Yeah. I always recommend to everyone just starting out, house hack. You know, we bought that 4-family house. It was the best thing we did. We don't have to pay that housing expense. And you could see, you know, housing expenses can be huge. If you go to this family example, their housing expenses translate to $15K a year. I guess that's not huge, but they only bought a $200,000 house with only a $114,000 mortgage. So they did a decent thing. But housing expenses can be huge. So yeah, that's what everyone can. I recommend all my friends buy at least a duplex, have your tenant help out with the mortgage or pay it if you can. All you have to do is move the data behind the charts and you can add line items. Yes. Great. Okay. Well, any other questions? I was expecting more questions, but we could end it here. Did you guys like it? Tell us about page income in the future. What's page income? Passive? Passive income? Passive. Passive income. So yeah, I like passive income. Things we do are like Amazon, FBA. So passive income is any income I consider that is you don't have to work hour for dollar. You're not trading an hour of your time for a certain amount of money. It's you build some kind of system. So for us, it's rental properties, and it's not exactly passive because we're there sometimes fixing things, taking calls. Honestly, we fix them right the first time, so we get a call maybe once every 2 months, once every 3 months about something or other, but it's really not that bad. And so we get that $103,000 in rental checks every month. It seems like a lot of money, but when you subtract that from our total housing expense, we're actually not netting that much. Maybe we're netting like 15, 20K. We do have a pretty big home maintenance vacancy factor of 10,000. I don't think we spend nearly that much, but anyway, that's what we're allocating to that. So that's some passive income. We also have an Amazon FBA business where we sell pacifiers online on Amazon, and we just ship bulk 1,000 packs of pacifiers now to Amazon, and they just ship them out to our customers who buy them on Amazon. So it's pretty passive. I do have my mother-in-law upstairs, and we pay her 25 cents to put labels on them and help us ship them out, so we don't have to do the work. And she gets some side income because she's retired. And so it's passive. It's a system we built to create an alternate stream of income. Are there any other ways to look for multifamily properties? Yes, there are many ways to look for multifamily properties. If you are in the New Jersey area, I am holding a real estate investment meetup 2 days from now on Wednesday, February 27th at 7 p.m. I'm going to try to record that presentation for those that aren't local, and I'll upload it to this YouTube channel. So another reason to subscribe. I'm going to talk about how my wife and I went from $0 in real estate to $1 million in real estate in 2 years. So that's $1 million owned, not necessarily $1 million worth. But you can see here our appraised value of $1 million, and these are actual appraisals on our houses. And but they have mortgages, so equity-wise, it's really only $300K of equity in those two properties. But we'll show you how we did a cash out refinance to go from that first 4-family house to buying another 3-family house, and then having 7 units and having a lot more cash flow, a lot more rental income coming in. And we even bought one house off Craigslist. We're using a different method now where it's kind of like a really personalized direct mail thing. Anyway, it sounds complicated, but it's not bad. Come watch the video or come to the meetup. Yeah, it's a free meetup, Clifton, New Jersey, at my church. It'll be cool. It'll be fun. Okay. I think that's it. Hey, give a thumbs up to the video if you liked it, and subscribe. I think I'm supposed to say that a lot because that's what YouTubers do, and I'm trying to become a YouTuber kind of guy. But more into the blog, check out faninvestor.com. I just did a wedding post, which is actually my wife's first post about weddings. Did you know the average wedding in the U.S. is like $33,000, and in North Jersey it's $65,000, something ridiculous, and we only spent $6,000. And after all the gifts we received, thank you, Uncle Michael, you were the most generous donor. We only paid $2,600 out of pocket. Yeah, maybe I will post that right here. faninvestor.com/wedding. My wife's first post, and I think it is pretty good. So, okay, with that, there's no further questions. I am going to sign off. You guys have been fun. I hope this has been informative, and good luck. Godspeed. Thanks for tuning in. See ya.